Earnings very much in focus. We are positive 2 minutes in by 0.5%, up 0.8% on the Nasdaq. Pretty amazing what we've seen in the Nasdaq over the last week. In fact, the last 2 days, given what's been happening with Treasury yields. Yields are much higher, and the Nasdaq looking more and more resilient by the day. On the earnings front, 70% into earnings season here in the United States, with the latest results out from Under Armour, cutting its profit forecast. Let's get the latest with Taylor Riggs. Hey, Taylor.
And John, I think what's interesting, and I'll let you decide how much we've been cutting estimates coming into this earnings season, but I guess the positive news is that about 74% of the companies so far that have reported are actually reporting a beat here on the bottom line, and maybe more better forward-looking guidance. About 34% of those companies are also guiding higher in terms of the bottom line as well, though about 30% guiding lower. Again, though, the big question here is how much had we really cut some of these estimates coming into this earnings season. What goes for the year goes for the earnings season. Energy, utilities, of course, the best performers on a price basis on the S&P 500, and also sort of the best performance in terms of actually the top line surprise here. Maybe showing some of the pricing power and whatnot, at least when we think about some of the inflationary environments underway and the top line translation of that. As we think about going forward, what's left, about a fifth now of the S&P 500 in terms of value is left to report. You still do have a lot of tech, some healthcare, maybe some discretionary. I know Walmart's in there, Home Depot, Eli Lilly, NVIDIA. Of course, as we think about sort of some of the chip makers and the ramifications after AMD yesterday. So that will be a big, again, sort of check post, signpost here going forward.
Taylor Riggs, thank you. Look out for Taylor a little bit later on a closing bow with the team, of course.